All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you're not done so already, give the video a like, subscribe to Jason's channel, come find him on Patreon, come find me on carnivoretrades.com, or follow me on Twitter and subscribe to my YouTube channel. Anyways, here, starting off the S&P 500, we can see we had a little pullback week, all things considered, a little push up Monday, and then a gap higher through these pivots that I said would be resistance here, and then a bit of a rollover. All things considered, some type of a pullback was in the cards. We knew that was going to happen. Markets got really overbought, amazing short squeeze off the lows here, and needed to do some backing and filling here. A pretty quiet week, all things considered. We had yield curves inverting. We had lots of news coming out, but when you have big moves like this, it takes time for the market to digest it, and sometimes it can remain a little impervious to news, and sometimes just the mechanics of the market will dictate that things need to quiet down for a little bit, even if we get news, and it just takes time to digest sometimes. So overall, spiders did come up into resistance. You can see on the weekly time frame here, came up into this red bar, got through the 20 moving average. She did close above that on the weekly, but pulled back off the highs. Same thing on the triple Qs, went up into that 20 moving average. And the that weekly red bar high there, you can see the 100 and 200 moving averages got tested and now getting a pullback off of that. And same thing on the Russell going up into that 100 moving average, and the Dow Jones Diamond just getting above the 100 and then pulling back. So all things considered, a pullback week. Markets were overbought, and we came back in off the highs. So overall, I don't really see too many problems here in the equity markets in the near term. Nothing to say we can't pull back and make a higher low. Let's take a look back at the spiders here. Doesn't mean we can't make a higher low and make another move up. Now, again, I've been very clear, since really last year that 2022 is going to be a bear year, but there are bear market rallies, and they can take some time to play out. So just bear that in mind. Just because I say we can make a higher low and make another high, doesn't mean I'm all of a sudden turning bullish or anything, or forgetting that there's a yield curve inversion and forgetting that there's inflation and all sorts of problems out there. But just acknowledge that you can have pretty sizable bear market rallies, and they can happen. Now, if we get a high volume reversal, meaning a sell-off with good volume over 150 million shares, that could mark a serious top. So be on guard for that. If that happens, we will, reconsider everything. But for right now, I don't really see too many problems in the near term. And it was relatively a quiet week overall in the market. Anyways, let's look through a few industry groups as we usually do. So semiconductors, again, coming up into resistance, getting close to that 100 MA. You had these pivots up here. Pretty sharp sell-off. A lot of it was AMD. So AMD's stock has had a few problems here. Micron took a really big hit after gapping up on Wednesday and coming back in, but NVIDIA actually holding up really well, and this makes up a large weighting of the SMH, but NVIDIA holding up okay. Semi's pulling back just like everything else, and it's trying to find its footing around this 20 MA. No serious problems, at least at the moment, but we'll have to consider, the AMD is going to be, unless that stock turns around, it could put some pressure on the semis, so that is something to consider, but nothing terrible just yet. IGV also pulling back off the highs. Nice little bullish kind of flag pattern here, and then get a pop, and then, pulled back in, but nothing terrible here. You're still kind of potentially making higher lows. You're back above the 50, and, we actually finished green on Friday with the down market. So nothing terrible on IGV. Dow Transports did reverse pretty sharply. This was a little unfortunate. It had a nice little pop here, really good bull flag pattern, and just couldn't get through that zone here. Didn't even fill this gap really, and it came under distribution on Friday. There was some news about, I believe the trucking industry lost a bunch of jobs, and that put a lot of pressure on. That put a lot of pressure on the rails. CSX took a big hit. Norfolk Southern, FedEx also took a hit, as did UPS. Airline stocks seemed to be relatively okay there. Uber did come back in a little bit, actually finished green. Lyft did finish negative, but it was mostly limited to the rail stocks. You see Canadian Pacific there taking a big hit. Granted, these things were pretty overbought here in the near term. Look at Union Pacific, a little overbought there against CSX, but so they were due for a sell-off, but a pretty sharp move, taking the transports down, losing this green bar here, and filling this gap. Now, it doesn't mean it can't move higher here. I don't think it gets up to that 17,000 area anytime soon. The weekly time frame is still, relatively okay. But essentially at this point, it's going to need to do some serious backing and filling if it wants to make a run at 17,000. So clearly there's a lot of supply there, and it did reverse pretty sharply. So we'll keep that on note. Another area to watch here is home builders. So XHB here and ITB, both very noticeably weak. So really not participating in the recent rally, and signaling that there's problems in the housing market, and that will continue to happen moving forward. I do expect rates to continue up, mortgage rates, and these stocks here are telling us something about the housing market moving forward. And if you have that yield curve inversion, obviously this is just it's pretty much a recipe for disaster for this sector, and we'll obviously keep an eye on it. Speaking of rates, 10-year pulling back a little bit off the highs, but still finished up on Friday over 2% here, and it's still holding trend. Again, it's a little overbought, but there's nothing to say it can't continue higher. Same thing with the 30-year. 30-year did pull back off the highs pretty sharply. And again, kind of diverging. We're having inversions happening right now. 5s and 30s, 2s and 10s, pretty much everything negative that can happen is happening here in the Treasury market. I still think there is a good chance, though, that this 30-year can get up to 2.8 before it's all said and done. That said, rates got a little overbought in the near term and had to pull back here. Did close below that 20 moving average here. So we'll see if it continues to do some backing and filling next week. All right, so high yield. So let's look at HYG. We've been talking about this now. Got above that 20 moving average. You did have a sell-off Friday. You filled that gap. You came off the lows, though. So big picture, high yield debt is a problem. If this continues lower, which I do expect it to eventually, it's going to be major. It's going to be a major problem. There's just no way around it. But in the near term, you were able to recapture that 20 moving average. You pulled back off the highs, and I think it's, at least for now, it's kind of in the safe zone. But if it loses these moving averages and loses this pivot, that would be very problematic moving forward. We'll obviously be keeping an eye on this one. All right, financials, kind of pulling back again, just like everything else. So nice move up, little fade there on XLF, held the moving averages. I don't think this is a broken pattern. I know a lot of people are starting to get bearish on fins, and, not for a bad reason, but I think right now the pattern doesn't suggest anything's terrible with it. Broker dealers also kind of putting in potentially a higher low here. So we'll see if they can make another leg up, but I think later in the year, fin stocks will be a major problem. But for right now, they do seem to be okay. All right, so crude here. So let's put these trend lines back on. And I drew these in the other day, but you can see that you have this kind of triangular pattern here building on crude. And again, it got very overbought in the short term. And I think it's going to have to do some backing and filling personally before it can advance higher. Now, if it breaks through this, you got this lower trend line here, you got the 50 moving average, this pivot, this bigger trend line. If that breaks, you're going to go down to 95 likely, and that will be a wall of support. So that would be a really good buy zone, I would imagine. In fact, I'll be buying that myself in that area. At least for a swing trade. But, if you break back up, nothing to say you can't make a higher high and make a run at 120, 125. There will probably be a wall of resistance there. Maybe you could pierce double top, but I don't think crude's quite ready to break out just yet. But either way, interesting little pattern here starting to form there on crude futures. And the crude stocks, the oil stocks, XLE is holding up really well. Again, still pretty overbought here, especially on the bigger time frames. You look at the XLE monthly here, just really extended here, especially from the 20 moving average. The XOP did finish slightly off of that 100 moving average, so a little overbought there on the monthly. The OIH I showed you last week, I believe. This is in a much better technical pattern, though, I would say, on the monthly, especially on the weekly as well. Above all those moving averages, albeit a little bit overbought. So nothing too terrible there. The oil stocks are holding up, but crude, spot crude, may need to do some backing and filling in the near to medium term. Anyways, nat gas. So we talked about this last week. This is on breakout now. Probably gets up to that $6 handle. Let's take a look at the weekly. So last week I said it closed above this red bar high, and I said that was going to be bullish. And then you closed above this week, you closed above this red bar high, so that is also very bullish. Doesn't mean it can't do some backing and filling. It's probably going to get up to $6. You're going to have a lot of resistance at this trend line, maybe 625. That's going to coincide with kind of a double top area. But overall, nat gas is acting well, and it's on breakout. I love that triangular pattern it gave us there, and just got a nice little blast off and really an impulsive breakout through that level, and then closing above this pivot high in a weekly time frame. I don't see any problems here with nat gas at the moment. All right, dollar index, just continuing to back and fill. We talked about this weekly resistance. This is a wall here, and that's why the dollar is stalled out. Now, it hasn't pulled back and it hasn't sold off. So it's holding up okay despite this resistance here. And if this can continue sideways longer, there's a chance it can push through that. So, you know, just be aware of that. If we have a breakdown and you lose maybe this green bar low on a weekly basis, that would probably change. But for right now, I don't see any problems with the dollar, and really not too much going on here this week. It was relatively quiet. All right, so gold, we got to talk about this. So pulled back off the highs, and we did something pretty important this week. And, you know, I mentioned this for the last couple of weeks, but we closed above this inside bar high on a monthly time frame. That is uber bullish, folks. Very, very bullish here. So that did happen. I've been watching this for quite a while. And if you've noticed, over the last couple of months, I haven't been necessarily super bullish on gold. I haven't been bearish either. But this is the reason why. And now we've negated that. So that is a huge positive. The one thing that is, here's your slight negative, is you're still inside of this red bar on a quarterly basis. Now, I think this is a lot more minor at this point. Reason being is because you did negate the monthly one, but look at the trend here. You know, don't discount the trend. So when you have, you know, a bearish pattern or a bearish bar inside of a strong uptrend like this, chances of failure are usually pretty high. So I'm still going to give gold the upside bias here. Near term, you know, you could make a case you've got like a sharp move down and kind of a bearish kind of flaggy pattern here. So maybe gold moves down, maybe corrects a little bit in the near to medium term. But overall, I think that scenario I laid out in the video on my channel a couple of weeks ago about kind of the long-term projections. If you haven't checked that out, come check it out. It's an awesome video, by the way. But I think that scenario is that we are in kind of a 2006 to 2008 sort of period in the bull cycle, in the gold cycle rather. And I think that you know, we can expect much higher prices over the next 12 months or so. And then perhaps we'd have a pretty steep correction, but it would also be a ridiculous buying opportunity as well. Anyways, another positive though in the near term for gold, take a look at GDX. This is holding up really well. Still holding all four moving averages, even as gold prices have come down pretty sharply. So GDX is leading. If you look at silver, you know, starting to pull back pretty sharply. Could make a case you got kind of a flaggish pattern here, but take a look at the SILJ. This is flagging up nicely and holding up. I like this pattern here, especially on a weekly time frame. So nothing wrong here with the miners, and I like it when the miners lead the metal. That is a bullish indicator, and you know, nothing terrible there on the daily or weekly. Platinum and palladium, however, definitely on the weaker side. So kind of getting a dead cat bounce here is platinum here. I don't think I wouldn't do anything with platinum right now. Same thing with palladium. I think these do need to test lower prices before doing anything else. Copper overall, so we had that sell-off, and now you're moving up and you're trying to flag. So take a look at the weekly. You're trying to flag a little bit beneath that 480 area. Probably needs to do a little bit more consolidation, and then maybe it can make a run at 485 bucks again. I think personally a government is holding this, is holding copper down, because every time it tries to advance up, they just shoot it down. And yeah, anyway, that's my opinion. But copper is holding up here in the near term. All right, so let's look at, so we haven't talked about uranium in a little bit. Let's just look at the URNM really fast. So again, actually, let's look at CCJ first. So, you know, I said a few weeks ago, I told you guys in this video, I believe, we should get up to 29, and we got up there. We actually got up to about 31 there on CCJ, very close. So overshot that target. And overall, I don't really see any issues with uranium right now. So this is hitting a target, short-term overbought, nothing terrible though on the weekly. It's doing really everything it needs to do. Actually, let's look at the monthly. So these uranium stocks are doing everything they need to do. Here's the URNM. Actually, let's use the URA. You know, I said like months ago that this was going to be a wall of resistance, and it is, but look at what it's doing. You know, move up, and now you're just backing and filling and consolidating. So these stocks, uranium, spot uranium is doing everything it needs to do, and I don't see any problems. Again, you know, you can have these corrective periods. Here's Sprott Physical Uranium Trust. This one's actually into double top, whereas you have the URNM, which is significantly off the highs here. So Sprott Physical Uranium actually outperforming. That's telling you there's money flow into this, which is a good thing. But again, nothing wrong, you know, when you have a bull market and you see backing and filling and stuff like that. Again, uranium is behaving well, and I don't think there's any issues with the spot price at all. Anyways, let's flip over here. Let's talk about the coins. So Bitcoin continuing to, you know, pushed up a little bit earlier in the week, and now just doing some backing and filling. I don't know if it can get through this trend line. you know, it's going to need to consolidate a lot if it's going to, but I can tell you right now, it's going to need probably at least 4 more weeks of consolidation to get through that. In my estimation, this is a wall right here. And I don't think that it has enough strength to get through it right now, but currently it's holding up okay. You had this nice little wedge breakout. You kind of back tested it. So it's trying, and it at the moment, it's currently safe. No real problems. Same thing with Ether. Nice little wedge breakout, like this pattern. Short-term overbought, but again, wall of resistance around this 3,800 area. But Ether is acting well, and we'll give it the benefit of the doubt for now. No real problems at the moment. All right, so flipping back over to the spiders here, again, we could make a higher low. In fact, that's probably what I would expect. There's going to be some good support around that 442 handle here on the spiders. And it's possible that if we do make a higher low, that we can take out this high. But you're going to have major resistance at 465, 470 if that does happen. So again, we're not expecting a whole lot out of this. But again, if we get a high volume reversal, a gap down with over 150 million shares, that probably says this market is cooked, at least for now. Anyways, we're going to wrap it up here, guys. Again, subscribe to Jason's Patreon, subscribe to YouTube. Come find me on YouTube or on carnivoretrades.com, Twitter, etc. I'll talk to you guys next week. Have a great rest of your weekend.